Good evening, I'm Giuseppe Basile. I'm the essential you can find at the website www.fibstalker.com. I also post regularly on Twitter using that Fibstalker nickname. Good evening, today is Tuesday, March the 4th, 2014, and this video I'm going to review for you the four major markets, Euro-Dollar, Forex pair, the S&P 500 mini futures, the dollar index futures, the gold mini futures. So let's start from the daily chart of the Euro-Dollar pair, which is what you see on the screen. You remember from yesterday that I was looking at this on the daily of this measure move long, and we know that this measure move, if respected, meaning if price does not go below 137.12, 137.11, then we should see 138.66. That's the way program trading pushes price in sequences. And you can watch yesterday's videos and look at the sequence we had. At the moment, this level is this area of support is still holding, and let's see what happened on the 20-40 minutes for our chart here. In the broken line is the 137.30 area of support. 137.12 is the level that will mean a failure of the current sequence on the daily time frame. So yesterday I mentioned this trade, and actually today we got participation at this trade. Unfortunately, on the 15 minutes was not easy to trade. On the 40 minutes you would have entered around 137.72.68 with the 4-piece front run and a stop above 137.85, and you would have had two reward to risk if you want to exit this trade at 137.30, or anyway you would still be in this trade, and this would be a free risk trade now with a stop above the highs. So what can happen here is that we can actually continue moving lower. So this level of resistance 137.72 as a target, 136.96 at the moment, and we could just see the market continuing moving lower, in which case, as you will remember, if we lose 137.12 on the downside, then the next level of support is going to come at the 136.50. So that could be the possibility here for this this trade to hit the first target and then continue into the second target. That'd be a very good reward to risk ratio here for this trade. So congratulations to those who took this trade, which I gave yesterday. Moving to the 15 minutes chart, I want to show you why it was not very easy to trade on the 15 minutes the shorts here. I gave you yesterday the trade for the euro dollar. I gave you the complete specification, but now as you know, we actually wait the test of 137.72 and then the failure. However, we actually we had a sequence here which could be modeled as I'm going to show you here. Just gonna make this a little bit bigger, and we had first tradition, then first and second target hit, and then we actually had lows to highs, and we hit at the highs we hit this target, and then we could only use again lows to highs because highs to highs, because this was an extension that did not reach the second target. So as you can see here, we would have entered the 137.49 with a stop above highs here, but actually market would have reversed on us, and it would not even have given us a free risk trade, and the market would have instead continued higher, hit this first target of this basket setup, and then eventually come down. So when this happened, one strategy would be to when we see the market is actually moving against us, one strategy is to reduce the position so that this stop is now equals. Now if price gets to this level, the stop level, we actually lose one unit of risk. It's not very easy, so this was not this trade would have not been successful in this case. Would have been stopped out once. There would have been the need of a retry here, and a retry is part of my strategy, but it's not something that obviously I can explain in such a short video. So moving to the SP500, the SP500 just continues higher without a stop here. I want to show you on the weekly where this market is going. As you know, this market is going towards the 1900 level, and more exactly is going between the first target of these lows to highs here, which is 1896, 1898, and the first target of this extension, which is a basket extension. So, and this is lower 1888 here. So this is the area where we could see actually move lower, and the market continue higher, and if we get a retracement, there are going to be a few levels here. One is going definitely to be this extension here, and then there will be the all the way halfway back, which are two levels we have to keep in mind. We are very far from this level, so it's not something that we can trade. Moving to another 40 minutes, we had actually yesterday I mentioned this trade, and the market actually tested that level, but then eventually broke up, so it's not something we can trust. On the 15 minutes, let's see where we are at the moment, and I'm going to show you a sequence and also the level that we could actually retrace to if we break an important level. So we have a sequence here. The first trace 1839 support, first and second target hit. The second target came at 1856. The market moved above it, and when we trace high to high, we had support again 1853. You can see here the sequence, and market went to the first target 1863 and second target 1868. And at the moment, the market is actually testing the next level in this sequence, and so we could make the case that actually the actual level was actually tested during the trading day. So at the moment there is the next level, which is the 1866. So if we break this level, there is the possibility for this market to trade all the way halfway back from lows to highs on the 15 minutes here, and this is going to be the trade you have to keep in mind for tomorrow. We break 1865.50, and there is a possibility to trade to 1853. So with a stop above 1875 is going to be 10 pips risk here for potential 11 pips. It's a one-to-one risk to reward trade. Of course, there is a better way to trade this to time this trade. If we break 1865, it's to wait the retrace and then actually sell when we get to the blue line, and this is something a little bit more complicated that I teach in my mentoring on fibstalker.com. If you are interested, just contact me. Moving to the dollar index futures, I want to start from the daily here, and I will only show the daily actually because there's not a lot of information we can infer from this chart. This chart does not have the same volume of the dollar, and actually the dollar is always providing the information we need. So we had this measure move, you will remember 93, 81 basically, hit the first and second target at 80 and 80, 30 and 80 here, and then we have been I've been looking at this next measure move in the sequence. It was respected first, but then it broke, but price went any way to touch the first target. This is called a basket setup in my method, and I say that once we got there like this, typically we can get a very quick move higher, and this is a reversal move. I told you this yesterday. At the moment, what is happening is that we are actually testing our level of I'll trace this in a better way here. We are testing our level that was our all the way halfway back here, and there is the possibility that we break higher this 80.26, in which case then the next level of support is going to be, sorry, of resistance is going to be to match the next level of support that we have in the euro. So this would be 80.57 if we move above 80.26. Finally, gold had started a correction here. Those who follow me will know that actually I'm looking for two levels of support. The first one is an extension high, and now considering current highs that we had actually on Monday, after this gap up 1320, this could be a reversal formation here. We don't know just yet, and we don't care actually, because we just follow what program trading is doing, and program trading is looking at this 1316 level here as the next level of support. If we break below 1306.90, so below 1306, 1305, 1306.80 here, then we have the possibility for a full retracement, and this would bring price into 1268 if you consider recent highs here. Now on the 12-40 minutes, I want to show you again that you have always to keep in mind and keep an eye on when we have all the way halfway back retracement in the different time frames. And today we had one here, and 1342. So we are going to study now on the 15 minutes this sequence of measure move higher, which brought price into that level of resistance 1342. On the 240-minute chart, the way you would trade this, you take 1342 with a frontal and put a stop above 1345, 40, 45, 50 here. And the first target would be this 1323. So you would have actually typically a 4 to 5 reward to risk trade if you take this kind of trades. On the 15 minutes, I can show you the sequence of measure move and how it played out. And if you played this sequence, you will still be in this trade. And I'm not sure whether you would have already. So if you traded the actual entry and stop on the 15 minutes, you would have already a free risk trade here. So you wouldn't bother here, and you would actually take half off and then move your stop above the highs here. If you were to time this using the 15-minute sequence, then this is what I would see, and this would be the best way to model this move. And once we got participation in the front run at 1335, price got into 1342, and then the next measure move failed here, and that would have been your entry. You would have received anyway a free risk trade, even if you were trading the 1337.80 level, and you probably enjoy a free risk trade here. So you would have a stop above this level, and enjoying an half of your position short into that level of target I gave you before. This is it for this first video. I hope you enjoyed the video. I hope this is useful for you. There are a lot of opportunities here, as you can see. Keep following the signals and trade the Fib stalking technique. If you want to learn more, come to my website or write to me, and subscribe my newsletter. I'll have your contact, and I'm probably going to start a mentoring online mentoring on this method, and how you can actually come with very good opportunity on the daily 24 minutes and 15 minutes using the sequence of measure move, which are actually enforced by the presence of program trading on all time frames on the largest markets. Enjoy, have a good evening, thank you for watching, and all the best, and good luck for tomorrow. Bye bye now.